Allan Randall of Estabrook and Company, thank you for being here.
Yeah, thanks for having me. I've been looking forward to it.
I have too. So tell us a little bit about what you do and the company does and all that.
Yeah, so Estabrook and Company is a full-service CPA firm down in Hamilton, which is in Baltimore City. We have a satellite office up here in Bel Air as well. At Estabrook and Company, I'm one of the tax accountants in the firm, and we are like I said before, we're a full-service CPA firm where we're really looking to holistically be able to serve all of our clients. And we do that through making positive impacts on the lives that we're called to serve. We do that through business and personal income tax preparation, professional bookkeeping services, and tax planning as well. And especially from the tax planning perspective, there's been a lot of new changes with the Tax Cuts and Jobs Act of 2018.
We might as well just dive into that, because there has been a lot of changes. So what are the biggest changes that you've seen?
So the biggest changes from a personal side is that the standard deduction has increased for the individuals. The child tax credit has increased as well. And then the tax rates have decreased for individuals. So a typical 15% tax bracket in 2017 has now been reduced down to 12% in 2018. Wow. So nice savings for individuals there. And then on the business side, corporations have seen a drop from 35% for their corporate income tax rate to 21%.
And these are for the big corporations.
Those are for the big corporations. To help out the small business corporations, there's been a new qualified business income deduction where the flow-through income from a business to the personal owner of the 1040, where they report their own income, has been reduced by 20% as well. So that's huge for small business owners.
That is huge. So if a small business owner nets, the net profit's $50,000, then we take a deduction of 20?
Correct. Yep, 20%.
Wow. Is that for this year?
That is for, these changes are in effect for the next 7 years, so through 2025.
2018 to 2025.
Correct.
Wow. So your clientele is it often business owners?
Often small business owners is what small to medium-sized business owners. But then from there, we're able to help them out not only from the business side, but then also from the personal income side as well. So we take care of all of their needs from a tax perspective.
Because if they have a LLC or S Corp, it flows through anyways.
Correct.
So you have to do the personal.
Yeah.
Now, you mentioned bookkeeping.
Yeah.
So for this small business owner, it allows them to work on the business and not in the business, right?
Yeah, exactly. So instead of a small business owner who might be going out and getting sales and working on a on-site project, to having to come back and worry about making all the deposits, running all the expenses out of the business, paying vendors, and then being able to record all those changes inside QuickBooks, we're able to have a dedicated staff member at Estabrook and Company who works alongside the business owner to be able to provide all those reports and be able to give them all the data to say, hey, this month or this quarter your net income was this much, and they can determine how much they want to save, how much they want to put back into the business to continue to grow the business. And that really then lends itself right into the tax planning piece as well.
I imagine when you have those clients who use all of your services, their books look amazing.
Yeah, if I'd say so myself.
Opposed to, someone who may be disorganized. That's okay,
Yeah, the disorganized ones are the ones that, or even if they're not disorganized, are they properly recording expenses the right way? If they are using their home for their business, did they take a rent? Were they trying to take a rent expense for their mortgage as opposed to taking a home office deduction? So you just have to, there's a lot more follow-up and a lot more questions when somebody's doing their books on their own to make sure that you're not setting them up for failure if they were to ever get audited. Because at the end of the day, you want to make sure that you're filing a return that can stand on its own, that has a more than likely chance not to get pulled for either an audit or a review, that in the event that it did happen, that we're able to have the documentation in place to be able to prove why we took whatever the deduction was.
Yeah, and just that little example you gave about the home office, I mean, that's just so small.
But it could be a huge deal. You have to make, in that example, if you're taking rent for your home office, you need to make sure you're also picking up the rent on your personal return and
Oh gosh.
It's just negating itself overall. So it's one small thing that people think that they can do and really drop that net income number of their business.
That's the reason.
But we have to look through it and say, okay, this X amount of dollar deduction shouldn't really be there. We need to properly record it so that you don't get audited, or have to then, if you do get audited, have to pay back the tax on that deduction overall. So sometimes can get a little hairy when you're doing the books and records on your own, but that's why even if individuals do their own bookkeeping, that we still look to meet with them on a quarterly basis so that we can review what they've done and how they've recorded things inside their QuickBooks, and be able to come up with a plan to be able to pay any type of income tax that may be needed, so they don't owe a lump sum at the end of the year.
Because not all of your clients are bookkeeping clients as well. Yeah,
no. Right. I mean, we have a majority of them are. There is a large amount that are bookkeeping clients that rely on our expertise so that they don't have to worry about it. But yeah, there's other individuals that hired a admin staff to do the bookkeeping, or they're trying to do it on their own, and so
or whatnot. Yeah.
Right. We just need to work with them and work with their bookkeeper, work with their CFO to make sure that we can be ahead of the game when it comes to needing to pay income tax, or set up with a plan to be on time to file a timely return at the end of the year.
And that's the quarterly reviews.
Correct.
Not just doing it once a year, right? And surprise, here you go. Now, one thing I love about working with the Estabrooks is it's a family business.
Yeah.
So if you will, just dive into that dynamic real fast.
Yeah, so my father-in-law, Jay Estabrook, started Estabrook and Company back in 1995 when he moved down from Massachusetts. My three other brother-in-laws, my sister-in-law also work at the office. We have 17 of us all together between full-time and part-time staff at Estabrook and Company. And I think there's 9 of us that are in the family. So it's a very
9 out of 17.
Yeah, 9 out of 17 is a very close-knit family that really enjoy working together, especially with the hours that we work during tax season.
And it gets crazy.
It does get crazy.
I've witnessed this.
But it's fun. It's fun, having flexibility. And there's, from my perspective, coming into the business 3 years ago, there's a lot more buy-in working for a family business as opposed to another firm.
I love it. Now, let's just wrap it up by reviewing the key points on the tax changes. We mentioned on the personal side, what was it?
So tax rates have decreased.
Okay.
Standard deductions have increased, and the child tax credit has increased as well for those individuals that have qualified dependents. On the business side, large corporations saw a drop in their corporate tax rate. And then for small business owners, we have the new qualified business income deduction, which allows you to reduce your net income in your business by 20%.
20%. Awesome. Well, Allan, Randall, thank you for taking the time. If you have time in 2019, maybe we could do a market update in your industry.
Yeah, definitely. We're going to continue to monitor how the new tax changes are going to evolve. Like I said before, they're in place until 2025, but doesn't mean that they don't come out with updated regulations throughout the year. So we're constantly monitoring it and reviewing it and informing our clients how changes have affected them individually and for their business as well.
Awesome. Well, let's do it. Thank you again.
Yeah.